Hey folks, David Frost, LazyGapTrader.com, and in this video I want to show you an example of how we get another bite at the apple on one of the morning gap trades and how it came back to fill a gap. And I get a lot of questions, why do I use a 60-minute chart sometimes and why do I use a 10-minute chart sometimes? And frankly, I use all the different time frames because when you put all the time frames together, you get the best picture and the highest probability trade when you can look at the market from a number of different perspectives. And this is an example of just how we do that. We're looking at a chart of Take-Two Interactive. And this was a gap trade from a few days ago. And it doesn't really matter whether or not, and when I say a gap trade, it was a morning gap trade where I identify levels where a stock should bounce from if it's selling off or pull back from if it's gapping up at the open. But in addition to that, in the course I teach at LazyGapTrader.com, I teach you how to not only derive the morning gap trade levels, but I also teach you how to play the stock a second time, how to build a list, because stocks will generally come back to fill gaps left open by a gap higher or a gap lower in the morning. In this particular case, Take-Two Interactive, TTWO is the ticker, we're looking at a 10-minute chart. And just in the 10-minute chart, if you're looking at gaps, you might think, and we're looking right here at this area, you might think that the stock is going to come back and fill this gap and then pull back. But lo and behold, the stock goes higher. And the question is, why does it go higher? Well, I've given it away by the fact that I have this line in. So let's go over to the 60-minute chart and let's take a look at what we're talking about. So at $33.40 was the gap left from the closing number of Friday, February 5th, 2016. So the closing gap was at $33.40, which was the close. Now, if I go back to the 10-minute chart and show you that that's not the gap here, which the opening level was $33.16. And if you thought that the stock should come back and fill this gap and pull back from that, this is why you need to take a look at the larger time frame sometimes. What happened in this case was that the stock continued higher and some folks might have got nervous and been stopped out because the stock was going against them. That's why I take a look at the 60-minute chart, and you can see here at $33.40 on February 8th, which happens to be the day I'm making this video, the stock had a high of $33.44 in this particular candle, okay? And then the stock had a low in this candle of $32.90 and even went lower in the next candle. Let's take a look again at the 10-minute chart and assume that we were going to short the stock off of the gap from the 60-minute chart, which was $33.40. Just several candles later, 1, 2, 3, 4, 5, 6, 7 candles later, which is just slightly over an hour later, the stock is down at $32.76. Now that represents a gain of about 75 or 76 cents just over an hour's time from the gap off the 60-minute chart. And you weren't fooled if you were looking at multiple time frames off the 10-minute chart thinking that it was going to pull back from this gap here. These are the type of things that I teach in my course at LazyGapTrader.com. I teach a lot of different methodologies. I teach how to play the morning gaps, and I teach how to play the gap fills successfully. So come over at LazyGapTrader.com, check out the course, and you can also get a 2-week free trial to my morning gap trades. You're more than welcome to see what I do on a daily basis with the morning gap trades and learn how to do this for yourself, because it's the most profitable day trading strategy that I've found, and I've been doing this over 20 years. You can make money on gap trading each and every day in the markets. LazyGapTrader.com. I'm David Frost. Come check it out. I want to teach you how to trade the gaps. Thanks for tuning in, folks.